I have a bit of a warning for you. So, what's happened is quite interesting within the past 1 or 2 hours. The price of gold has been reversing, and we spoke about the warning signs about gold on this channel and on the Moon Show. There is one indicator that I talk about a lot, and that indicator is called the momentum reversal indicator, and it's portrayed by these numbers that you see on the charts. And it's a derivative or a derivation of a indicator called Tom DeMark's TD sequential, where in very pure essence, if you see a movement of 9 candles to the upside, you're going to see an MRI top, and that's going to cause a 1 to 4 candle reversal in trend. And with the likes of gold, we want to see gold reversing after such an astronomical increase. And we said that the MRI top is likely going to do that, at least form some sort of a consolidation, anyways. Because whenever the price of gold reaches a top, or starts to drift slowly towards the downside, the price of Bitcoin experiences the inverse effect. If we look at the price comparison of Bitcoin with gold, you can see it is exactly the mirror image, just inverted. So gold had a double top, Bitcoin had a W formation, and you're doing the inverse. Unfortunately, gold is still treated as the risk off asset where people invest in gold when times are uncertain. And when times are more certain, people invest into risk off assets. And there are other factors for why people choose to invest in gold or risk off assets. Bitcoin will eventually become better than gold in that choice because it is better from a property perspective. However, this is the day and age today. That's why gold's market cap is 30 trillion and Bitcoin's is only 2.2 trillion. And that shows you the value over the long run. But just more about gold. Gold is also having an MRI top over on the 12-month chart, which is the yearly chart. So a lot of topping signs for gold. And in the short term, you can visualize that whenever gold does a movement towards the downside, Bitcoin goes up. But in the long term too, if we go to the weekly picture, it's going to be more obvious. The move that happened in 2020, you can see that gold here in 2020 experiences a top and then it slowly descends to the downside. And that's when truly Bitcoin's rally in Q4 of 2020 begins. So it's a fantastic thing. Do we know if this was actually the top for gold? Obviously, now it's quite hard to tell, but there are good indications that it is. And for Bitcoin's price action, that's relatively good. So when we talk about Bitcoin positionings, we're still very bullish. I still expect potentially Bitcoin to come down to that 54 simple moving average, which is at 100K. So for preparation purposes, if we are to break below this crucial trend line that we spoke about, then 54 simple is likely where we're going to go. And does that mean I'm going to short Bitcoin? No, I don't like shorting Bitcoin in bull markets. I only like to accumulate more Bitcoin when there are opportunities where I notice that, okay, price can drop off a little bit. So on weeks I have a limit long position to buy at the 54 simple moving average. If you wish to do so, then links are in the description down below for weeks. And for Pinex, if you want to do trading bots that buy the dip continuously and then automatically sell to the upside, then you can use the Pinex link. And with this specific link, if you deposit $100, you'll get a $100 bonus to try out the futures trading bots where you don't even have to risk your own sort of capital. But overall, I'm bullish. If we do see the drop, I'm going to buy the dip. I still think a probability of the drop is very much there, right? I wouldn't be getting too euphoric because there is still a CME gap at 107,380, which I think is going to close. I think there's a very definitive chance, actually, in my perspective, that we are going to go ahead and close it. The facts, 5 minutes, please. Thank you. So we did come very close to the CME gap by like a few $100s, right? It was very close. But even though that's the case, it doesn't count as a close CME gap. I know a lot of naysayers about the CME gap say that, oh, it's irrelevant and, oh, we're going to start closing it when Bitcoin goes to the upside or in the bear market. But the truth is that's just not how things work. And this is resistance, and this was a bit of a manipulative move from gold's swift dump. So I think the CME gap is going to end up closing, and ultimately I still think that 100K for Bitcoin is on the likelier end, and this is the positionings that I have to prepare myself for that situation. Before we end off today's video, there was some quite bullish news about Ethereum and other layer ones, and I would say also for Chainlink. The Federal Reserve, the official Federal Reserve channel was live streaming a payments innovation conference, right, where Sergey Nazarov, the founder of Chainlink, was one of the panelists. And just a TLDR from the conference, it looks like they're trying to find ways to bridge the compliance aspect of traditional finance with the efficiency of blockchain technology. The government clearly realizes, thanks to the Trump administration, that there is very good potential of blockchain technology. But the reason why they're not switching from TradFi to blockchain is simply because there's so many layers of AML and threat protection that centralized finance uses that takes a lot of time to process transactions. And there's a lot of human capital involved as intermediaries. So transactions take longer, they're more expensive, but at least there's compliance. Whereas with blockchain, it's still a little bit of wild, wild west in relative to traditional finance. But you need to find ways to bridge the two together. And Sergey Nazarov was explaining maybe in the next 2-3 years, those bridges are going to be understood through smart contracts and through the help of themselves and other companies like Fireblocks is also a panelist. But I see a bright future for layer ones, and I'm very bullish for Ethereum in the long term. And I think Ethereum is going to go to much more drastic heights. I think quantitative easing will be introduced in Q2, Q3 of next year, and that's really when we're going to get the push for altcoins. And also, obviously, for Chainlink, I'm very, very bullish too. And you guys know that Chainlink is doing a lot of things for stable coins. They're doing a lot of off-chain data, bridging to on-chain data, allowing things like tokenization and so on. So these projects that provide actual technology for the problems that we've identified in this cycle, or for the new innovations we identified in this cycle, like stable coins and tokenization, those are the ones, or RWA, those are the ones that I'm mostly bullish on. With that said, thank you guys so much for watching. In the next 8 days, we have the next FOMC press conference coming up. We're going to be live streaming it over on the Moonshow channel, as we always do, so stay tuned there and on this channel. And if you appreciate these updates, make sure to destroy the like button and subscribe to become a crypto kid. With that said, guys, take care, and I'll see you all on the next video whenever it's necessary. So guys, bye-bye.